OtisWho. Ain't nobody coming to see you, Otis.
Hello. This is the OtisWho podcast. I am your host, OtisWho.
Ain't nobody coming to see you, Otis.
Somebody here to see me. Even if it's just one person, this is for you, the people. Let me stop playing. Okay, here we go. I'm gonna get straight into it. I'm not gonna bore you. Basically, this is gonna be unedited, no cuts, anything like that. It's gonna be way better than the last one. The last one I'm referring to is the conversation that I had regarding trust, and particularly the 508c1a trust. I'm going to do that again without the background music. Yes, I apologize. The background music was a little bit too high. So guess what? We're going to get straight into it. No fluff. This podcast is about trust. One of many trusts. This particular trust is the 508c1a. Let's get right into it. Let's go. All right, here we go. Trust 101. First and foremost, the trust I'm going to be talking about, I do have available. If you wouldn't mind, you could definitely take out your phone, scan the QVR code that you see on the screen to my left. All right, I'm confused, but you see it. Scan the QVR code. It would definitely take you to my podcast website, and there is an extra tab. You can click on that extra tab and you will find the particular trust that I'm going to be talking about available on there if you choose to make a donation and receiving that. If you already have of your own trust, that's fine. Handle your business. Go for it. But I do have that available. But that's what I'm going to be talking about and referring to, the 508c1a. Everything I'm talking about is definitely printed in black and white. Is not hidden from you. It's definitely Googleable. Is that a word? Googleable. It's definitely DuckDuckGoable. Do your research. It's definitely IRS publication worthy. It's definitely USC code worthy. All this, the information that you're going to receive from me today is definitely not from me. I didn't make this up. It's definitely from written sources. But let's continue. Another thing too, if you like the content, if you like me, buy your boy a cup of coffee. I'm working hard for you. It's for the people. The people. Bane from Batman. Great movie. Great psychological movie. Government-based. All right. Let's go. All right, here we go. Everything you need to know about the foundations of how trusts work. The basics. This is just the basics. First and foremost, this information is provided for bookkeeping purposes only. That's it. Bookkeeping purposes only. It is for those wishing to properly maintain their finances and credit rating. Finances and credit rating. It is essential to realize that with rampant identity theft, which is true, it makes sense to know how to protect your assets adequately. And with this trust, this irrevocable 508c1a trust, you can definitely protect your assets adequately. This information is no way considered to be tax or legal advice and should not be construed as such. I'm going to say it again. This information is not considered to be no way tax or legal advice and should not be construed as such. This is just information. We're just having a conversation. I'm just talking to you. You are no way going to hold me accountable or harmless in this situation. We're just having a basically conversation about 508 seeing when they trust. Again, all this information could be found. I'm just talking to you. I'm just talking to you. But one thing's for certain, two things for sure. With this information, you will be empowered through a document, an entity of such, known as the trust. There are multiple types of trust. Each trust is created for a specific purpose, but there is only one structure that properly allows all benefits, and none of the detriments, none. All the other trusts, you have to know which hat to put on. You have to know how many positions you could hold at one time, which I will get into. Yeah. Let's continue. I'm going to go over briefly, but if you were to get the information from me for us to trust and everything that I have to offer is actually in more detail, but briefly here, you will learn how the tax system, the USA specifically, is a voluntary system. You will learn how trusts are used by all the world's billionaires to protect their wealth. And there are numerous cases where we found these people to have more money in a single trust than Warren Buffett officially has in Forbes. You never heard of them, though. They're private. They're not private. The trust is private. Even better, these assets are protected despite the mistake these people make in their life, ensuring they, meaning the trust, which the trustees control, get to keep their assets in the trust. The money. Beautiful, beautiful, beautiful. Live your life free from the worry of having assets seized for any reasons, since you don't own the assets. The trust does. But as you are trustee, you control all the assets of the trust and can absolutely do anything at any time with the assets without any limit. Own nothing, control everything. ONCE. Once. Own nothing, control everything. That trust owns it. You, being the trustee, controls it. Just that powerful. Just that simple. Yes. Okay. With this information, you will be dealing with the teachings of how to use, here we go, the common law, irrevocable, ecclesiastical trust. During this course, during this information, during this teaching, you will learn the basics of the trust. If you were to get and donate and purchase the information from myself, you will learn how to get the EIN the right particular way. You will learn how to set up the business trust, the business as a trust, and you will learn how to protect your money and your assets. All based on this one beautiful, powerful thing, the common law, irrevocable, ecclesiastical trust. Please look those words up. Each individual word, common law, 2 words, irrevocable, ecclesiastical, and trust. Put them all together. What do you have? A powerful entity. Yes, you do. Let's continue. All right, here we go. When you start looking into trust, you will be quickly overwhelmed with the amount of information available. Everyone from Harvard lawyers to the IRS has weighed in on the topic of trust. At least they've weighed in on trusts which are in their jurisdiction. Let's have some fun now. And while there are millions of trust variations that are within their jurisdiction, there is only one that is not. One that is not. This trust is the only trust that has proven to be impenetrable, even if taken to court, thus protecting the assets it's sworn to keep safe. But we'll get into that a little later, since the possibility of the trust even being in court is almost nil. Almost. Now, they will try to bring you in there, but if you know how to stand on your square, you will walk out unscathed. Unscathed. Unscathed.
Got him!
Living proof. Right here. Living proof. Powerful, powerful. But let's continue. Okay. It's important to know all courts that rule over any matter, any legal matter, I should say, must first establish jurisdiction to know if they have the authority to rule over that case. I'm going to say it again. All courts that rule over any legal matters must first establish jurisdiction to know if they have authority to rule over the case. Simplified, there are only two jurisdictions, private and public. If you're on this journey, since I have been since 2015, actually I've been on it my whole life, but I always knew something was wrong, something was off, but I really delved into it 2015. You heard these phrases, public, private. There's only two. Government agencies only have a jurisdiction over public affairs and never private ones. Government agents, i.e. courts. Come on now. Only public ones, never private ones. I lied the separation of church and state.
Got him!
You have to know. Now, knowing this is one thing. Implementing and standing on it is two. That's a separate thing, as my bracelet get called. Two separate things. You have to know how to implement it and have to stand on that square. You have to. The trust is created within the private realm. This ecclesiastical common law irrevocable trust is created in the private realm and can only be ruled on via a court of equity or common law. I'm going to say it again. It can only be ruled on via a court of equity or common law. This is the 508c1a irrevocable common law ecclesiastical trust. However, all courts in the United States have been converted for nonprofit courts of admiralty and only rule over public affairs and cases. Now watch this last statement, because it happens all the time, because I put myself in this as a whole, don't know how to stand on one square. You have to know how to stand on that square. You have to know this. Jurisdiction in a court of admiralty can only be established due to an error of the trustee. If you get pulled into that court and you don't know what you're doing, you will automatically fall into their hands and automatically be in their jurisdiction because you don't know how to stand on your square. That's the fault, or my fault. That's an error of the trustee. The trust itself stands and states what it states. Period. No words need to be changed. No, nothing need to be altered. It stands on what it stands, period. Do not alter a word. Just put in your pertinent information and know what you're doing, know what you have. You got to understand. You're okay. I'll continue. So, what exactly is a trust? A trust is a type of corporate entity. Corporate entities are also known as businesses. Hold a purpose for running enterprises or holding assets, also known or referred to as finances, money management, etc. The position one can hold in the trust, which you should already know this is basics, this is Trust 101. There's only 3 positions. Each position have more than one name, but there's only 3 positions, period. Grantor / creator, there's more than one name. Trustee, beneficiary. Grantor, trustee, beneficiary. Let's get to the basics. All right, so we already know what a trustee is. We already went over that. So let's go to the next one. You already know, I went over briefly about what we're going to get into regarding what we're going to be getting into, basically how to set up and get the EIN the right, proper way. There's a way to get it. Yes, you can go on the IRS website. All this information is free. You can go on the website every day on the irs.gov and get you an EIN to establish you a trust, a business, or whatever every single day. But you have to click and know what box to check to set yourself up in the right entity, in the right situation. Trust me, it makes a difference. You check the wrong box.
Got him!
You out of order. That's all I'm going to say. If you check the wrong box. So there is a way to get the proper EIN. I will show you exactly how to do it step by step. You will not have any questions, none whatsoever. None whatsoever. Okay, here we go. Grantor. The grantor is a person that has assets, whether it be money, property, etc., that they would like to put in a trust for safekeeping. A grantor makes donations to the trust. Hear me out. I'm going to say this again. This is important. This is where people tend to lose it. Let's keep it real simple. The grantor, the settler, the person who started the trust, all they do is put the assets into the trust. And there's 2 ways you could do that. Donation or granting. Donation or granting. In this beautiful 508c18 ecclesiastical, irrevocable common law trust that you're donating or granting everything to God. And I mean that. I am not a religious person, but I'm spiritual. You have to believe in what's going on. You have to know with this 508c18, this is not a game. You have to know that you're giving. You got to understand what's going on. You came into this world with nothing. You're going to leave with nothing. Everything is donated to God. Period. No ifs and buts about it. There's no questions. You shouldn't even have to second guess it. This is what the trust is. I digress. So the grantor donates or grants everything into the trust. Keep that in mind. That's powerful. Okay. Next one. The trustee. What does a trustee do? A trustee is someone who manages the trust for the grantor in any way the trustee see fits without limit. A grantor, here we go. A grantor and trustee may be the same person. Think about what I just said. Don't add nothing to it. Don't take away from it. Listen to what I just said. The grantor and the trustee may be the same person. Me being the grantor who created the trust, and me being the trustee, same person who can control and run the trust. I'm going to grant whatever I get as the grantor into the trust, and now that same person can run it too. I'm running it. I granted it, now I'm running it. Now I'm running it. Because it just said a grantor and trustee may be the same person. Put it together, people. Put it together. They don't teach this in school. They don't teach this in school. Put it together. It's so simple, it's complicated. Let's continue. Let's continue. The beneficiary. The beneficiary is someone eligible to receive benefits from the trust. There can be multiple beneficiaries to a trust. What does that next line say underneath that? No one can hold all three positions for a trust, or the trust is no longer a legal trust. One cannot be beneficiary and a trustee either. I'm going to say that again. That's real important. One cannot be a trustee and a beneficiary of the trust. One could be the grantor and the trustee of the trust at the same time, but never the trustee and the beneficiary. And never in that point, all three at the same time. Any of those two situations occur, all three positions so-called being held, or the beneficiary and the trustee, you are done. The trust is null and void. It is now a revocable trust, and all assets that you were called yourself trying to protect is now in danger. It is now penetrable. You have to know what's going on. There is only one trust, one, that you can have all three, that you can hold all three positions. Only one that you can hold all three positions in and won't have any liability situations at all. Only one. That one trust is called the Living Revocable Trust. Intro Vivus Trust. Look it up.
Got him!
They don't want you to know that. There's only one trust. One trust that you can hold all three positions. It's your Living Revocable Trust. Intro Vivus Trust. Only one. But I'll talk about that in a whole nother podcast. That's a whole nother episode. I have that available as well. But it's not as powerful as that 508c1a. They both are up here, yes. But one is not impenetrable. You can't break it. You can't. Because one, of course, is revocable. One is irrevocable. The living trust is revocable. You can take things in and out. The irrevocable trust, the 508c1a trust, is irrevocable. Once you put it in, you cannot take it out. And I continue. Let's go. Let's keep going. Oh, I get excited. Let's continue. Let's continue. Okay. What are the trusts used for? Trusts are set up by people who wish to have finances managed either in their lifetime or after. Trust can be used to hold cash or any other things like property investments, business interests, life insurance policies, vehicles, etc. Now, I know people are on different levels when it comes to this trust game. I'm not going to even say trust game. I know people are on different levels when it just comes to just being in life in general. I get it. But if you understand what I just said, man, you are set. This trust alone by itself, without doing anything, just by living through this trust, living in this trust, you're free. And I mean that from the bottom of my heart, but you have to know that because this trust is powerful. And I do mean that. You have to know what you have. And it's so easy to stand on that square. It is so easy to stand on that proverbial square. It is so easy. Let's go. Trust can be used to hold cash and other things like property, investments, business interests, life insurances, vehicles, etc. Trust can also have credit cards, bills, and anything else any other corporation can have or do.
Got him!
If you understood what I just said without the liability. Oops. What I just said. Trust can also have credit cards, bills, and anything else like any other corporation can have or do. But you're the trustee. No liabilities. If you know what you're doing, and it's not hard. Let's continue. Here we go. Let's get into it. What is this special trust that I'm talking about? I've been hitting around to it. Let's go. The trust that I'm focusing on, the trust that I'm talking about. Common law, irrevocable ecclesiastical trust. This is not, here we go. This is not a taxable entity. The IRS classification is a 508c1a. It is not a taxable entity. It is not. It is a type of trust that operates exactly like a church as far as tax exemptions are concerned. It operates like a church. 508c1a, common law, irrevocable ecclesiastical trust. It is not a taxable entity, and it operates just like a trust as far as it being tax exempt. But here's that next line that goes after that. Here we go. This is where people get confused. This is where people go and run out, which is fine. Nothing wrong with that if you really are trying to operate as a church. Beautiful. Ain't nothing wrong with that. But it doesn't have to be a church. It doesn't have to be. You're just going to have the tax exemption of a church. Don't believe me? Look it up. 508c1a, the IRS classification. Go look it up. Also, it can be a convention, which is how I operate. A convention, which simply means anything anyone agrees to. 2 or 3 people meeting, which means anything anyone agrees to coming together. Convention. Look it up. Don't take my word for it. It's in black and white. Look it up, please. Once you understand this, you will understand and you will absorb it and you will get it. I'm for the people. I'm for the people. I just love that character. I'm sorry. Let's go. This means one can legally do anything that any other corporation can do financially. using this trust without limits. So, one does not have to be a church, but gets all the same benefits. Now, let me say this that's about to tick some folks off, and I'm going to say it, and I'm going to say it. If you belong to a church and you're getting up every Sunday morning and sometimes going 3-4 times a week, and you are not tax exempt as the pastor that's sitting behind that pew is, you're in the wrong church.
Ha! Got him!
If you ask your pastor, how can I become tax exempt? Because we are all under the same covenant. You're paying your dues, you're tithing. You should be under his covenant, correct? He's tax exempt, correct? The whole congregation should be tax exempt. Ask him about it. Ask him or her about it. Tax exempt. You should get some type of statement every month for us being a tax credit or something, a tax donation or something. The same thing that pastor is getting behind that pew, you should be getting as a member of that congregation. Yes, you should. If you are not tax exempt, I don't know what church you belong to. I don't know what PMA you belong to. Oops, I'm talking too much.
Ha! Got him!
I continue. Okay. Only 31 minutes? Ooh, I'm good. Let's go. Here we go. Why is it so special? Here we go. Here we go. This trust has an exception to applying, and this is big. This trust has an exception to applying for the 501c3 that everyone is trying to go out and get. Your basic nonprofit organization. Everybody is trying to go out, spend this money to run and jump through hoops to get this elusive 501c3, your basic nonprofit organization exemption. Meaning this trust that we already have, this 508c18 that I already have, it's already tax exempt upon creation. As soon as I put my information in, my pertinent information, and I go get it notarized, it's already tax exempt per USC section 26, 508 C1A. It's already tax exempt. I'm not making this up. It's already tax exempt. You need no doggone piece of paper. You don't. This trust allows you to operate in commerce with the potential for no taxes due to being in the private realm. Taxes are a voluntary system and only mandatory for employees of the federal government. You already heard it before. This is not your first time hearing this. Do your research. But you're too scary. You're going to continue to pay your taxes to the IRS, who is nothing but a big oversized collection agency. That's it. But if you know how to talk to them and know what you have and know who you are, they're your friend. They work for the people. For real. If you know what you're doing. Here we go. Taxes are, again, a voluntary system for federal employees. But here we go. If you have this trust, this beautiful 508c1, this 508c1a beautiful trust, USC section 26, USC 26, section 508c1a. Look it up. If you have this beautiful trust, whether you work for the government or not, you donate your check to the trust and you can get a tax deduction as the donor.
Ha! Got him!
If you were paying attention, what did I say the creator slash the settler slash the grantor of the trust can do? What did I say the duties of the grantor slash creator slash settler can do to a trust? What did I say? What did I say? You could donate or grant things into the trust. So what did I just say recently? You could donate or grant your paycheck to the trust. And it's a tax deduction.
Got him.
It's a beautiful thing. Get it? Get it. You got to overstand. Get it? Please get this. Please get this. Please get it. It's so simple. It's so simple. Why am I not liable for taxes with this trust? Here we go. This trust, this beautiful trust, is a United States Code, Title 26. United States Code, Title 26, Section 508, C1A Trust, which has an exemption from filing for a 501c3 exemption. That means you do not have to file any forms with the IRS ever, except to acquire an EIN. I'm going to say that again. You do not have to file any forms with the IRS ever, except to acquire an EIN. Now, I am well aware, and I digress briefly, that there are processes out there, beautiful, that you are required to file tax forms. Go for it with your understanding of what you're doing. But just so it be known, so you know, you could stop right there once you get your trust notarized, put the correct individuals and entities on notice, and you're done right there. You are not required to file any tax forms ever, except for to get you an EIN to operate in commerce. That's it. You can stop right there and be free. And I mean that from the bottom of my heart. It's been proven. It is proven. You can stop right there. But for those with overstanding, you can file taxes if you choose to get what needs to be done, the credits and things like that. But I digress. I'm not here to discuss that right now. I'm strictly here just to stay point and on focus with this 508c1a common law ecclesiastical irrevocable trust that is impenetrable. Yes, it is. I can't even say it, my stuttering ass. But it can't break through. Knock, 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 knock. Let's continue. Also, since it occurs no income, you do not need to file any forms with the IRS. No annual forms are filed for this trust. So let's go over the important message one last time. You never have to file a single form with the IRS with this trust. I'm going to say it again. You never have to file an IRS form with this trust. You do not, except to acquire the EIN for it, as per the rules of this trust, via the code 508C1A. Look it up. This is some powerful information. You can go read it for yourself and find it. I'm just happening to just be talking it and just regurgitating what I've read and put into fruition. I'm living through my trust. OtisWho podcast is a trust. Oops. OtisWho?
Ain't nobody coming to see you, Otis.
OtisWho is a trust, just as your actual name is a trust. But since I know that, I made other entities, majority of them all 508c1As. I'm just a trustee. I am OtisWho. Otis is the trustee. OtisWho is the trust. I'm for the people. The people. I always have a proxy in front of me. Always. I continue. Let's go. All right. Whew. Private trust hold no legal liability. Can't stress that enough. Receive no benefits from the government and therefore pay no taxes. I'm going to say that part again. I just. If you're private and you say you want to be free, you should be receiving nothing from the government. Nothing. No benefits, no nothing. You're private, right? You want to be on the private, you want to be in the private realm. You should be receiving nothing from the government. If you do, then you are liable to pay taxes on those services, i.e. food stamps, EBT, i.e. Medicare, all that. You are, of course, yes, you got to pay taxes on that. That person does, not you. That person does, obviously. Hopefully, I just put something in there. Private trusts hold no initial tax liabilities, receive no benefits from the government, and therefore pay no taxes. But receive benefits from the government. Receive them. And see who needs to pay the taxes. Common sense, people. Now, let me just go over this information. Go do your research. Go do your research. But for those who, I pray that you take these words and you go do your own research, it's going to come up and you're going to find out, damn, Otis was right. OtisWho? Yeah.
Ain't nobody coming to see you, Otis.
I was right. Taxes being a voluntary system was admitted as true by Steve Miller. He's the former director of the Internal Revenue Service. He was part of the Ways and Means Committee hearing on June 27th, 2023. My fault, 2013. Ways and Means Committee hearing on June 27th, 2023. Take that, what I just said, put that in your Google search engine or any search engine, or even put it on YouTube and pull it and pull it up. It's going to come up. Again, Steve Miller, former director of Internal Revenue Service, in the Ways and Means Committee hearing on June 27th, 2013. Only federal employees are mandated to pay taxes. When questioned at the House Ways and Means Committee WMC hearing, Miller told House Representative Devin Nunes that America's tax system is voluntary. When Nunes remarked for clarification that the U.S. tax code is a voluntary system, Miller said, agreed. Please go do your research. Do your research. Pull it up. Don't take my word for it. So, basic stuff. Who would find this type of trust useful? Everybody. Every man, every woman, every child on this beautiful green earth. Yes, everybody on this earth, this beautiful earth, would find a use or will find this trust useful. But let's keep it real. Let's keep it 100. This language is basically draft based on the United States. The common law, irrevocable ecclesiastical trust protects you. It protects your family. It protects your assets from tax liability. It protects them from inheritance taxes. And the funds that go directly to the government, as well as preventing garnishments from wages. If you have garnishments coming out of your wages for whatever reason, If you have this common law, irrevocable, ecclesiastic trust, and you open up a checking account, a non-interest bearing checking account, they would not be able to garnish your wages. None whatsoever.
Got him!
It's the truth. It's the truth. If you have this trust and you present this trust to your bank with the EIN, let them present it to their lawyers. Let them. Would it scare some away? Yes. You might get turned down from banks. Yes, ain't no might to it. You probably 9 times out of 10 you will. If you look up, get the right one, but you're probably going to run into the first 2 or 3 that's going to be afraid of what you gave them. Don't get deterred, because that one that's accepted, they know what they have, and they know, you know, that it's impenetrable. Can't be messed with. Let's continue. So, I think it's time for me to get straight into the for real questions and answers into this. Let's get right into it. It's already been 46 minutes. Again, I have this information, this trust available. Feel free to click on or scan the QVR code if you like what you hear thus far. Hopefully you do. Support the channel. I appreciate it. Buy your boy a cup of coffee. Also, the information that I'm talking about now for us, the trust, the 508c18, that information is available on the extra tab once you scan the QVR code. And if you are interested in the trust that I have available with the donation, and you get a lot of information, you get the complete package, but I go into that towards the end. But let me answer these, let me do a few questions and answers that I have already pre-set up, and let's get right into it. And hopefully you're finding this information very, very useful. I really, really do. A lot of great information I have. I'm trying my best to share it with the people. I don't want people to make the wrong, simple, simplistic mistakes. So let's get right into it. Let's go. What do I name the trust? There is no one thing I can advise you on the name of your trust. However, I can just give you some pointers that may help you. The name should be easy to open up an account, and it's going to always have the word trust in it. Always. Keep it simple. If you are a church or something along those lines, keep it no more than 4 or 5 words at the most, in my opinion. For example, if it could be as simply as your name, John Doe Trust. When you spell out and you write that trust, it's going to be each word is going to start with the capital letter. It won't be all caps, because all caps, as you know, represents a dead man. It's an entity. No, my fault. It does represent a dead man. It's all caps. It represents an entity. All entities are dead. Come on now. I'm not going to get deep, but that's what that is. All caps. That's why on buildings, all the words are capitalized. Court buildings, government building, things like that. On ships, on tombstones, all letters are capitalized. You will never see it upper and lower. Never. This trust is an irrevocable ecclesiastical common law trust. Maxims of law, one with God. So I am alive. Oh, yes, I am. Upper, lower. That's all I'm going to say about that. So keep it simple. Whatever it is, upper and lower with the name trust behind it. Don't get all fancy, please. Come on now. Let's keep it simple. Let me see what else I have for you. I'm just going over some basic stuff. Again, all the questions that you have, deep questions, I have over 4 or 5 hours of questions and answers, testimonials, step by step on what needed to be done, I have that information for you. But this information I'm just giving you, just the basic questions and answers. I don't believe a lot of people are even giving this information out there. I really don't. I'm just going to just give you the basics. Don't use a P.O. box as your address. Never, ever, ever. Never, ever, ever. Don't use a P.O. box as your address. As far as establishing your 501c1a trust for these types of trusts. This is just my experience and my suggestions. That's it. You can do what you want to do. I'm just trying to talk to you. Again, don't get discouraged when you take your trust and try to go open up your trust account at the bank, which you're going to need your actual trust and the EIN letter that you got from the IRS when you got your EIN. Definitely going to need those. You could take your certificate of trust and don't take the trust, but I suggest taking the trust. Yes, you hear people say, and I've said it in the past, and I still say it to this day, yes, that trust is private. Yes, it is. And it shouldn't be shown to anyone unless it's behind closed doors or in chambers with the judge, or if you choose fit. It's up to you, but be careful and know what you're doing. But it's very, very limited. Now, you could choose to let individuals know what's going on, but it's really private when you take that into the bank. But you want 100% transparency when you open up this checking account, this trust account, so you won't have any problems when it's time to enforce it, which you won't have any issues because they have the actual trust. They read it. They read the bylaws. They read that particular one. I forgot that number. I'm not going to say it anyway. That one particular declaration that lets them know specifically that this trust is with God, is it's an ecclesiastical trust, and it's in the jurisdiction of God on the land itself, not in their realm. It says that. So once you get that approved by the bank, you better take that and run with it. Open up that account quickly, yes, and open up the rest of them at that particular location. You better. So yes, but it's up to you. If you just want to take the certificate of trust, fine. That's perfectly fine. I suggest taking the whole trust, but that's that. So let's get into these questions and answers real quick. Do I need to have a successor trustee? No, you don't have to, but I suggest and recommend that you do. Some banks, they do mandate that you have a successor trustee. It's not a big deal. You need to have one anyway. You need to have someone that's ready to step up just in case something happens to you, and they're already in place. So no, even though it's not mandatory, in my opinion, yes, you better have a successor trustee. Is a beneficiary named in the document? No. The trust is private, and you're trying to keep the beneficiaries private as much as possible. There are situations where you do want to allow or let people know who the beneficiaries are, but those are very small, minuscule situations. Very small, very small. But 99.9% of the time, don't list the beneficiaries on the trust document itself. It's not necessary. That's private. Now, you will list the beneficiaries on your minutes, your trustee minutes when you first establish the trust, or when you have a meeting period. You can list the trust. I mean, you can list the beneficiaries then, but on the trust itself, no. And yes, if you say you have a trust, if you don't have a Schedule A or trust minutes establishing your first trust meeting, and any other documentations that you've been having trust meetings thereafter, you don't have a trust. I promise you don't. Period. There are basic standard things that you need to have on the ready at all times. The trust itself, the certificate of trust, the trust minutes, and the Schedule A. Those are the necessities. Now, there are some other things that you need, Like when it's time for you to transfer property from one trust to another.
Got him.
When you're trying to transfer or receive property from someone else to your trust, you need transfer documentation. You need assignment documentation. Everything needs to be in order. Everything needs to be written for the most part. Yes, can trust be established by words? Yes, it is. And yes, they can. But you try your best to write it down. Just write it down and add it to your trust documents. If you're not doing that, you don't have a trust. And you're not standing on your square. And they will overrun you. But let's continue. So, again, the beneficiaries. I wouldn't write it in the document itself, but you could write it on your trustee minutes, record keeping. Where is my tax exempt form from the IRS? There is no tax exempt letter for a 508c1a. There is one for a 501c3, but not for a 508c1a. One is not required. You are automatically tax exempt as soon as you get your trust notarized. Soon as you get the EIN the right proper way. As soon as you put the right appropriate people on notice. Because a gentleman gives notice. Whether it's actual or constructual. Period. Oh, I love this. I just received a letter from the IRS stating I must file a 1040. Check this out. You could handle that in two ways. It's up to you. I am not an accountant. This is for educational purposes only. I do what I do because I want to. You could do what you do because you want to. But hear me out. Everyone that applies for an EIN, for a trust, gets one of these letters. You don't have to file for the 1041. You don't have to file the 1041. You don't have to. It clearly states that in the publication and things like that once you do your own reading. If you read the tax classification, it's not a legal determination and it is not binding with the IRS. Your 508c1a classification is income tax and personal property tax free. There is no tax exemption letter for the 508c1a. The trust does not take in income. It only grants or donates. The trust does not take in income. It only grants or donates.
Got him.
Listen, people. I just said it. Just listen. Take that in. Take it in. Can I apply for credit cards in the trust? Yes, you can. You better. Yes, you can apply for credit cards, a private trust, but the EIN is allowed to participate in public commerce. Now, let me give you some more advice. Please, before I drop this information, please scan the QVR code. Donate some coffee to your boy, a cup of coffee. I appreciate it. Help support the show. Now watch what I'm about to tell you. Any entity, whether it's a trust, LLC, S Corp, or whatever, any entity, and you go open up your bank account. But I'm specifically talking about your 508c1a living, my fault, your 508c1a irrevocable common law ecclesiastical trust. I'm pertaining to this, but you can apply this to any situation, any business entities. When you open up that account, this non-interest bearing trust account, don't accept the debit card. No, you don't want that. If you are credit challenged, get a secured card. If you have good credit, get these unsecured card. If you are credit challenged, get the secured card where whatever money you put down, that's your balance. This might be a minimum of $200 to $300 to $500, whatever it is, whatever the minimum is, get it. Try to get as much as possible though, but you use that card as means of using it as a debit card, but it's going to be a credit card, and your balance, your credit limit is whatever you put on that card. Be realistic about it. Be rational about it. Be able to take care of that bill every month because it will be set up as auto pay. You better set it up as auto pay. If it's only $300 on that secured card, whether you're using it for gas only, whether you're using it for food only, or emergencies only that month, whatever the balance is on the credit limit of that card, I suggest utilizing it. If it's for a secured card, if you only have like $500 on it, use it. But make sure that money is set aside so it can automatically be paid for every month. Which is doing what, people? Establishing a credit line, a great paydex score for that trust. That's what it's doing. Not only are you doing that, you have to do the other basic things like the net 30s and things like that. That's a whole nother course. But just the bare basic minimum, alleviate the debit card, you get the credit card, period. And you utilize that to get gas and everything. The credit card. Don't miss a payment. Don't miss a payment. Automatically is paid from your account every month, automatically. That balance is going to always be zero every month. And watch what happened to that credit score for us, that credit being established on that particular entity, that beautiful trust. Beautiful. That's how you do that. Just gave you a jewel. Just gave you a jewel. That's how you do that. Let's continue. Can I put my money into the trust and not pay taxes? This is important. We need to hear this. You must pay taxes owed. You must pay taxes owed. You being, if you earn the money as an employee. That keyword, employee. Even if you grant that asset into the trust, you, the person, still owe the taxes incurred. You got to consult with your certified public accountant to know what taxes are owed as the person after assets has been granted. You still have to pay that as a person because you already established that. But it's nothing. I promise you it's not. Can I modify the irrevocable trust? People are under the impression once you put things into the trust, can it be modified? You can't take it out. Here we go. Yes, you can take things out of an irrevocable trust, but it needs to be done a certain way. A certain way. And a lot of people don't explain to you how to do that. You have to go to a lawyer and pay them thousands of dollars to get them to show you how to do this. But it's so simple. I'm going to break it down to you now. Real simple. This is known as a consent modification. You can only do this two ways. One, you can either assign a trust protector. I know people heard this phrase, a trust protector, in the future meetings with provisions that allow them to step in and exercise very specific modification powers as defined in the trust agreement. Very specific. Or you can get authorization from the grantor and all the beneficiaries and make all the changes you like to that document. Real simple. One or the other. Trust protector, or get the grantor and all the beneficiaries to come in and make the necessary changes on that particular document at that time. Those are the only two ways to do it. Real nice and simple. Can I put my paycheck from my employer or have my Social Security checks placed in the trust? Excuse the ringing. I'm going to keep going. I'm taking care of business. Can I have the paycheck from my employer put into the trust? Yes, you can. Yes, you can. It is best to have your checks made out to the trust. If you can get away with that, it's your employer. It's to their discretion. But if not, you are able to donate your check to the trust. You could donate it. You or the trustee, you or perhaps the beneficiary, either or the creator or the grantor of the trust. You could donate it. Donate it. Simple piece of paper. I, such and such, donate to the trust. For God owns everything. That's all you need. A simple statement that could be held at the next trust meeting. Stop it. Buy your boy a cup of coffee. Real nice and simple. You're donating it. Them your trust records. You got it. Them your trust minutes. You're donating it via proof because you already donate. You got direct deposited. Your check has been direct deposited into the trust. The trust name has been direct deposited. And you have documentation that you donated by a simple piece of paper, 1 or 2 sentences, that you donated it to the trust. If you don't buy your boy a cup of coffee, and it's tax deductible. Ain't that like getting paid twice?
Got him!
I don't know. Even 1099 contractors can do this. Yeah, I better stop playing with me. Okay. What happens when a company that files taxes ends up paying the trust? Does employment cause tax liability? Let me read that again. What happens when a company that files taxes ends up paying the trust? Does employment cause tax liability? Okay, here we go. There is no liability for you when contracted through the trust. So basically what they're basically saying in layman's terms, if you're working through the trust, there is no liability. If you're working through yourself, there is liability. Okay? Now, you have to work that out with your employer, and it's up to them. It's to their discretion. But how many of you are familiar with the term vendors? If you work in an office or if you have a job, period, you know you should be familiar with the term vendors. People who come in, well, the company has outside contracts with other companies to help them make their company run efficiently, i.e., paper company, i.e., if you have sell cars, you have a contract with the gas station. Or if you have a lot of computers, you have a contract with a computer tech or computer software or other peripherals that you might need, paper, things like that. Those are outside companies that you're contracting with, i.e. vendors. So you could get employed through your job as a vendor if they choose to do it their way. It's up to the company. But that's how you would do it. That's how you will come about doing it. Or that's how you will be, or if you want, or you tie it in for, as an example, if you're having a job, you could do that. But I'm not gonna lie, that's kind of hard. But if you're doing business and you're not on a 9-to-5 job, which I don't have a 9-to-5, so it's hard for me to put myself in that position, but I understand that people that are in a 9-to-5 job and you're living and you're trying to live through that trust, it can be done. But this situation, I'm mainly talking to individuals who are establishing these trusts and they have businesses and things like that. And you're going out and you're getting contracts. And what I mean by contracts, you're just going out trying to do business as that trust and not your person. Do it as a vendor, not through your person. That's all. And it's very, very simple to do. You have your credentials. You have the EIN to do commerce. And that trust is the entity itself. You're just the trustee. Own nothing, control everything. Everything will be granted to that trust. Another hint. That's why it's powerful. You have a trust, but in theory, you have two. One is for commerce, one isn't. Both the same names. It's required. It works together. The one that's doing commerce, that's how you acquire the assets based on the credit history, the credit worthiness of the one that's in commerce. It has that strong credit score. It's out doing things that it's supposed to be doing. You, the trustee, are out doing business on behalf of the trust. You, the trustee, you're doing business. You're getting all the assets, the trust res, the trust property. You're getting all that and placing it in, getting it in the trust name based on the credentials of the trust doing commerce. But you take the assets that you got based off that trust that's in commerce, those assets go in the other trust that's not in commerce, the one that doesn't have an EIN. That's on that Schedule A. Acquire the assets from the one that's doing commerce, but you place those assets in the trust that's not in commerce, therefore can't be touched.
Got him!
I'll show you how to do all that. You need them both. You have to know what had to. Yeah, all right. Let's continue. When I donate money to my trust, how do I remove gift tax liability? Do I pay the trust and file that as operating costs? Great question. Here we go. You put the money into the trust as the grantor, remember? And it's not a taxable event. It's only income received as a person that will incur tax liabilities. Trust cannot create income, as all funds put in the trust are grants and thus non-taxable. It's just that simple, people. You're granting things to the trust. It is not income. Therefore, it does not incur any tax liabilities. You are granting or donating money into the trust. Come on now. Here's another good one. This is great right here. For those that do have businesses already established. If I need a business license, how do I get one and still have protection with the trust? Here we go. Pay attention. You use the trust to license any activity. You use the trust to license any activity. Sometimes the rules don't allow for the trust to get a specific license. I get that. Sometimes they don't allow that. The trust doesn't get the license, but it does all the banking and the operating for, say, for example, you who did get the license. Simply get the license with an LLC or another entity. Don't get it with the trust because it might be hard to get it in the trust. Get it with the LLC or another entity. And what you would do then is, if you get it with, say, for example, an LLC, say you have an LLC established, you would get the license, of course, in the LLC. But guess who's the single member of the LLC? Please tell me. The trust. Whoa.
Got him!
The single member of the LLC is the trust. Put it together. Ooh, put it together. Here's another good question. Can I be taxed for placing my IRA into my trust or 501 or whatever? Great question. Here we go. This is the big one right here. I'm glad the music not playing in the background on this one. Here we go. Here we go. If you take an IRA out of your name, it will automatically trigger a taxable event because you automatically take it out of your name. As soon as you take it out of your name, it's going to automatically, boom, automatic. They just smell that money. Tax, tax, tax automatically. Even though the trust may be a the trust is non-taxable. Okay, it's non-taxable, but it's still going to automatically trigger a taxable event out the gate. Okay, so the taxes will occur before you can even put the assets into your trust. But here's the thing, like I just stated earlier, where if you had an LLC, for example, you would make the trust the single member. The trust is almost the same way with this. On the IRA, on your other business checking accounts, on your your personal checking accounts, on any other accounts out there, period. But let's specifically stay with this, but you understand what I'm about to say. Guess what you would do to make it a non-taxable event? You would just put down the trust as the beneficiary. I'm going to say it again. IRA account. Well, whatever other account that you have. Go into the office. Go in with your trust certificate. Show it to them. Let them know that you would like to change the beneficiary from whoever you had down there to the trust. You just then and just now created a non-taxable event. So if something was to happen or you need to cash out, it's not cashing out to another individual. It's cashing out to the trust, which is a non-taxable entity. Buy your boy a cup of coffee.
Got him!
Come on now. Come on now. Come on now. Whoo! And last but not least, it's never too late. Well, I'm not finna go on there. I just might go and scare some people away. It might. To each his own. Does it protect against the mandatory vaccinations? For those of you who are concerned with that, I'm not going to get into that. To each his own. I'm here for the people. To answer your questions, yes. If you have this 508c1a irrevocable trust, common law ecclesiastical trust, yes, it will protect you from those pesky vaccinations or whatever, child care, all that, if you know how to operate through it.
Got him!
I promise I'm not lip service. It's not. Ha! Okay. It's been over an hour, almost an hour and 20 minutes. Here we go. Hopefully this information I gave you sounds a whole lot better with no background music. Again, if you would like to receive the information that I have been talking about, okay, if you would like to receive this, I do offer it on my page. Let me actually take you there so you know exactly how to operate it and know exactly what to do to get to it. So let me see, bear with me here. Let me see here. Go to, I just go right here. Let's go here. Boom. Yep. Here we go. Boom. And let's do this. Okay. Boom. Add to scene. There we go. And then, oh, okay. Okay, I apologize. I had the wrong screen sharing. Let's get to it now. Again, you would go to the web page, okay, by clicking on the QVR code, scanning the QVR code, or just putting in the website, buymeacoffee.com/OtisWho. Once you get to the page, again, you will have the option of buying your boy a cup of coffee if you choose to, or go right past that, click on the extra tab, okay? It will come up and you will see you have the option to make a donation for a consultation, or here is the information that you would get for as the Free Me Trust. Click on that, and this breaks down exactly what you would get. Real simply, the trust introduction, Trust 101 Foundation, Bankrupt Trust for Profit, the NFA quote-unquote gun trust. You will get the two trusts, one for private with no EIN, one with the EIN, how to create unlimited trust. You also get over 5 hours of videos of instructions, frequently asked questions, and testimony, and much, much more. So that's exactly what you would get, okay? And again, to me, it's great information. If you already have your trust, that's fine. Know how to operate and move through them. The information that I shared, you should be able to apply that to what you have going on, okay? If not, you could definitely, again, make a donation. You'll get that from myself. And also, I have the information if you would like to get the credit situation taken care of for us, your personal credit and establishing credit for your trust. I have that information as well, all proven to work and to do wonders. But that's neither here nor there. Again, take the information that I gave out that was totally free. Take it, stand on your square, do what needs to be done to make your life better.
Ain't nobody coming to see you, Otis.